Okay, fantastic. So welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will of course be going through live market analysis. We'll go through a watch list of trading ideas, a forecast of where we expect gold, silver and crude oil to be heading next. We'll be going through the commodity currencies as well, answering questions and of course providing live support too. So before we get into it, let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Over the last 10 years, myself and my team of experts, we've trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. For more information about our services, simply go to www.jointhelivetradingroom.com. Okay, so from there, you'll find out about all the services that we offer to our clients at the Gold and Silver Club. Okay, fantastic. So with that in mind, in fact, what I will do, let's just put that into the chat for everybody here. I'm also going to give you the link there to the Gold and Silver Club YouTube channel as well. We'll be putting out a fresh report this weekend. So if you haven't already done so, make sure you are subscribed to the Binary YouTube channel as well as the Gold and Silver Club YouTube channel. Today's session will be recorded on the Binary YouTube channel. So if you subscribe to that, you can rewatch that later on. And then this weekend, we'll put out a fresh report as well at the Gold and Silver Club. Or just go to YouTube and search for the Gold and Silver Club. You'll find over 350 odd videos on there, and just subscribe to our channel. Okay, fantastic. So with that, let's get into it. Our favorite trade ideas right now. What I'll just I guess I'll let you know in advance before we go through some of the analysis here. We've got some quite interesting moves right now. So we've got a significant sell-off at the moment on US equities. We've just seen a breach below the weekly lows for the S&P 500, the Dow Jones, and gold right now has just also broken out to 3-month highs. So it's really good timing, guys. So definitely pay attention to this bit, because we'll go through our trade ideas. We'll go through the narratives in the market. We haven't seen moves like this since about 2011 on certainly the stock market. So it's perfect timing to be here on today's webinar and to go through some trade ideas together. We'll keep it interactive. So if you've got any questions, any comments at all, put those into the chat. It's 4 o'clock London time at the moment. So it's normally a good time to actually go through, look at the flow of the market. The US dollar is pulling back a bit at the moment. Metals are certainly catching a bid. Oil is up. So we can have a look at how the markets are looking as we go into the weekend, and trade ideas later on today and as we go into next week as well. Okay, so good. With that said, so let's move over to my screens now. I'll just talk you through what we're looking at in the markets right now. Just bear with me. I just double check we're on the relevant screen. Yep, we are. So hopefully that should all be good. Okay, perfect. So hopefully you can see my screen at the moment. Just confirmation. Yep, thanks, Sharice. Okay, fantastic. Good. Right, so let's just have a quick rundown of the markets then. What I'm interested in right now is the flow. So we'll have a look at what the biggest movers are at the moment. Just after 4 o'clock London time, you'll immediately see the metals, okay? So platinum right now is up 1.3% on the day. Gold has just broken above $1,240. So right now, gold has just broken out to 3-month highs with this move to the upside. Today, silver at the moment is up 1%, and we still remain long on silver. In fact, we banked some profits on gold, but I'm looking at this level right now. We'll have a look if we get a further breakout this afternoon. And we're also looking at the moment at potential opportunities as well on some of the crosses here. It's been interesting because yesterday, after Mario Draghi's European Central Bank conference, we were shorting later in the session. We shorted the Australian dollar, we shorted the New Zealand dollar. Those worked out really well overnight, banking profits this morning. Now, something we were discussing at the Gold and Silver Club earlier on today, and it's something that for those of you who trade quite a lot, you may have become aware of. The amount of times that if you have a reasonable move during the Asia Pacific session, I've noticed this particularly on the sell side. So for example, if you've had a good sell-off overnight with the Australian dollar, US dollar, New Zealand dollar, US dollar, or some of the crosses, the amount of times they bounce back in the morning beyond 9 o'clock as we get into the London session. It's so frequent. So we banked all of our trades this morning on the Australian dollar, the New Zealand dollar, which worked out really well in our favor. And we've again seen that reversal. So if we just waited and hadn't banked profits on those, they would have completely reversed, because now the US dollar is selling off. Gold, silver, Australian dollar, New Zealand dollar, commodity currencies, they're all catching a bid. In fact, you can see here we're seeing a bit of a shift in sentiment right now. So they're all starting to move to the upside. So it's just, again, you want to be nimble in these market conditions. You want to be quite fluid with your trades at the moment. So you want to treat a lot of your trades, be in and out, which is quite useful in terms of what you can do on the MetaTrader 5 platform, trading CFDs at binary.com, where you can be in and out of your trades really easily via trading CFDs, where you can, of course, be day trading on those. So just to put that on your radar, because we've certainly seen that sort of price action overnight again here with the shift in price that we've seen. Big sell-off yesterday after European Central Bank announcement, and then today we've seen the buyback again here. And we'll have a look at that more closely when we go over to the charts there as well. Let me just give you a bit of a narrative of what we're seeing right now in the market. So let's just go over to foreign exchange. Okay, so the dollar hit a 2-month high today after a Q3 GDP tops the estimates. The dollar did break out initially, but now it's selling off. Gold is up near 3-month highs. Stocks are tumbling again. So gold prices rose on Friday towards the 3-month highs. They've now broken out to 3-month highs above $1,240. Investors are retreating from the stock market and piling into the precious metals. So the precious metals right now are getting the safe haven bid. Now, this is, again, quite interesting from a seasonal point of view, being October, and also what we saw earlier on in the year as well. When we had the big sell-off with certainly the stock market going back to about January, February time, when the stock market sold off, they also caused a sell-off in multiple markets. Okay, so we also saw sell-offs on gold, on silver. There was no real safe haven. And that also happened during the summer. Over August, when we had the trade war, escalation in trade wars, gold and silver and platinum and palladium, none of the metals were safe havens, okay, during that period. The US dollar was the safe haven. The US dollar continued to surge, put pressure on the euro, Australian dollar, New Zealand dollar, the pound, US dollar. Now, today, stock markets have had a very significant move this week. It's been the worst week for equities, European equities and US equities in approximately 7 years. But gold and silver, and gold in particular, and platinum right now, and palladium broke out to all-time highs. They are all getting the safe haven bid, okay? So just bear that in mind. So traders, they're moving their capital out of equities, and they are putting it into safe havens, which are undervalued still relative to where they began the year. Silver is still net in a negative from where it started in 2018. So is gold, okay? So safe havens are getting a bid at the moment, and that could be interesting to see if we get follow through, particularly if this accelerates over the end of October, go into November. If we start to really see a big shift here in overall global equity markets, you could see gold and silver continue to get a bid because they're still very oversold relative to where they started at the beginning of the year. Okay, so it's just worth bearing that in mind. Okay, so US stocks plunging on Friday as grim earnings report from Amazon, Alphabet rekindled a rush to dump technology and high growth stocks. Data showing economic growth in last quarter slowed less than expected. Okay, so that is causing that big sell-off at the moment. Oil as well, quite oversold, where it's broken down over about $10 over the last month here, and that's completely a shift in sentiment, where you might remember going back to just 1 month ago, all the headline news on Bloomberg, on Reuters, and even calls from Goldman Sachs, which have cooled down a little bit from this earlier call, which was that the price of oil would get to $100 per barrel by the end of the year. And now we're seeing this significant sell-off, taking the price back towards $70, and you're not seeing any of those calls at the moment. So we've seen quite a significant correction for oil prices falling on oversupply. There's been 5 weeks of oversupply now since we topped above 4-year highs going back to the end of September. We continue to see oil prices under a bit of pressure. When it does finally get supported, and it might be as we get into November when we see the sanctions on Iran come into play, oil could be quite a good buy opportunity if we get technical confirmation for a long. I'm already seeing my technicals are setting up for that, but probably will wait into next week before we start to execute new trades on oil, unless the Baker Hughes oil rig count later on today causes a breakout, which would automatically trigger us for a long position. But we'll have a look at that when we go over to the charts. Front page at the moment, Amazon shares sinking 10% on growth worries. So, okay, so basically this is the narrative today. A lot of pressure on stock markets towards the end of the week, and we're breaking below the weekly lows right now too. Yeah, I mean, overall, it's pretty red, isn't it? Across the board for the stock markets, the S&P 500, that looks to be really, I mean, we're at 4 o'clock London time now, so it needs to be something quite special for the markets to suddenly change from this sentiment. So with that, let's go over to the markets, and we'll talk you through what we're seeing at the moment. Okay, so I think it's just worthwhile checking in there in the S&P. So yeah, I mean, the S&P 500 rolling over, breaking back below the 2,700 level today. It's broken down to 2,650. It's at the lowest level since approximately May. That's been a fairly sizable sell-off. That sell-off has now, let's just see and marry that up to the sell-off that we saw previously going back to the end of January. So that was the magnitude of the sell-off. Let's just measure it out and just take that across. Hold on as I just move my audio. Okay, so that's the measured move that we saw back in January. Let's just compare it. Okay, let's move that across. Yeah, I mean, it's pretty much, it hasn't actually exceeded that move yet. So it would need to come down if we were to equal that move, the plunge that we saw back in January, 2,600 would be tested. Okay, so that would be from the high to the low that we saw during that correction. So again, if we're looking, so how many points was that? Yeah, it's about 3,000, well, 350 for the S&P, which is 3,500 approximately for the Dow. If you take that by magnitude of about 10. So yeah, that would be at the point where it would match the correction. If it comes down to 2,600, it would actually make sense for us to revisit that level next. That would be a major round number, psychological area of support. That would be where we meet up with the swing lows going back to May as well. I wouldn't be a buyer here of the S&P 500 at this zone. So right now, sentiment is pretty negative for the S&P 500. Now, gold has just broken out here to 3-month highs. We've broken above $1,240. What I like about gold, and I also like about silver, is the weekly chart and the monthly chart as well. So you've got follow through on the monthly. We've got a strong buy signal which has been developing on the monthly chart. We look like we probably set to hit 1,250 US dollars, which will be the next major level. On the weekly chart, you can see where gold has built up momentum. This is the weekly chart, and then we'll just bring it over to the daily chart. The next major level there is 1,250. There's no doubt about it. At the technical indicator, just for example, the 200-day moving average, that's where that resides. It's the weekly pivot. It's a psychological round number, $1,250. I don't know whether it will be able to get there today, but I suspect we could hit that level by the end of this month. So that would give us until, I think, the close on Wednesday next week, essentially. That would make sense as the next level for gold to get to if it does get additional follow through from this zone. It's been relatively range bound this week, but we are seeing that breakout. We're at the upper Keltner channels. $1,250 would be the target going between now and the end of the month if we continue to see additional follow through. Now, if you missed a move like on gold over the last week or so, we've actually been trading this whole consolidation, but getting in at the lower end of the zones, banking at the upper end of the zones. I don't like shorting gold, so I tend not to short gold that often. I tend to short commodity currencies. So yesterday, after the European Central Bank announcement, both Australian dollar and New Zealand dollar we were shorting. We banked profits on both of those overnight and this morning, and then those are actually reversing. So what you'll tend to see is normally the way we tend to play the markets for the metals. Sometimes we do short gold when we go through seasonal bearish periods, but not during seasonal bullish periods. And that's what we're in at the moment. If you consider October, November and December, October in particular, September and October, it's where you've got the wedding season starts to kick in Asia. Overall gold demand increases. Imports in Asia, they increase quite a lot. And generally speaking, I don't tend to short gold much over September or October. If my view is that they are going to sell off, I would just sell Australian dollar or New Zealand dollar, or I'll go long the dollar. So I'll move over to those commodity currencies shortly. I think before we do so, I'll just talk you through silver. If you missed a move on gold, you may still have time to look at silver from a trade idea point of view. Have a look at, on your own charts, you can do this as well, but have a look at silver on the weekly chart because we've got buy signals, and then have a look at it on the monthly chart as well, got a buy signal on the monthly. The monthly looks really good. You've got like a really strong rejection candle on the monthly, which takes you back down to the swing lows of 2015, building up some good support. We've just had a buy signal over the last month develop. We're long silver as a core position. I think it's just really undervalued relative to where the price started the year, where it could go by the end of the year. And I want this trade for the January effect move as well. We'll probably actually deliver a very specific webinar about the January effect and that trade opportunity that we look at going to December and January. We'll deliver a training on that on binary.com. But the January effect is a trade that we take advantage of. You can Google it, or you can look at some of our previous videos on binary.com and also our YouTube channel about the January effect as it relates to gold and silver. But essentially, I'm looking for a longer term core position here for gold and silver at these low prices as we get into January. I still see silver as pretty undervalued whilst it's below $15, and especially when it was at $14 recently when we found support at that zone. So we've been building up a base. As I mentioned previously on the Commodities Corner, what you want to pay attention to, that a lot of trend traders who track silver, this has been the case here for a while, is once we broke and closed above the 50-day moving average, trend traders who trade silver in this way, it would, in my opinion, they would need to get long, regardless of their own personal opinion. If they're a trend trader that trades on very simplistic signals, this from a technical point of view, there will be a lot of traders who will see that and there will be, silver has now broken and closed above the 50-day moving average. It's the second week it's done so. It retraced that level about a week ago, held up above that zone, and now you can see it's consolidating, building up support. But ever since it got above the 50-day moving average, the retracements have been really shallow, which is very different to the moves that we saw previously here, where each rally would get sold into. Note where it broke below and closed below the 50-day moving average back in June, July, and it stayed below that level for 3 months. Now it's above the 50-day moving average. In theory, whilst it's above the 50 MA, silver is a buy, and it's going to build up pressure for a breakout above a lot of this resistance. It's been above the faster moving averages for ages. So it broke above the 21-day moving average going back to about a month ago in September. It broke above some of the faster moving averages we track, like the 8-day exponential moving average. It broke and closed above that over mid-September as well. From a faster a trend trading point of view, that was already a buy signal around that time. But now the further confirmation there has come with a break and close above the 50 MA. So regardless of your opinion on moving averages and all the rest of it, you just need to be aware that traders do look at it from a trend trading point of view, and we are holding above that 50-day moving average about a week and a half, 2 weeks now. I think silver personally is building up a base here for a potential breakout. And once we get going above about $14.80, once we break above that level, it'll probably be a capitulation, lots of short covering. We'll see a move then up to $15, and then we can really start building up momentum, take the price up to the upper Keltner channel, 15.20, and then shoot towards the 200-day moving average, and then back towards about 15.70. That's my opinion in terms of what we'll likely see on silver here in the coming weeks and the coming months, particularly over the January effect is when I'm really looking for silver to pick up momentum to the upside. So that's what we're looking at on silver at the moment. Okay, so we've got gold where we're consolidating and we're currently at the upper Keltner channel, and we've also got the silver market, which at the moment is looking like we're consolidating for a potential breakout to the upside as well. So both of those I would definitely have on the radar. And then if we move over to some of the commodity currencies as well. So we were initially shorting the New Zealand dollar US dollar yesterday. We banked profits just this morning, so we saw the rollover in price, and we broke down towards the lower weekly pivot this morning. So we banked profits on the New Zealand dollar US dollar. So as I mentioned, typically what we like to do is, if our view short term that we're going to see a dollar breakout, we either go long the US dollar or we short one of the commodity currencies like New Zealand dollar, or we short Australian dollar US dollar. So the New Zealand dollar US dollar, I've discussed this on previous webinars, but basically from my point of view, this is just worked out really nicely to look at this sort of trade opportunity. Okay, so staircase, bear flag after bear flag after bear flag after bear flag, resistance to the 50-day moving average. I mean, you can see that, right? It's I'm sure a lot of you have probably taken similar trades. You might have even shorted that anyway. You probably saw that trade lining up yourselves. So basically, look how many times this has happened on the New Zealand dollar, US dollar. It's just multiple bear flag formation. So it rolls over. And in this case, this week, broke below the weekly pivot. Nice sell short opportunity. But don't expect too much from the trade. You know, you've got to get at the moment you want to be nimble, so you want to ideally just be in and out of these trades, catch a quick 50 60 pips on the move, sometimes more than that, sometimes 100 pips, get in and out, bank your profits, and then reload on another trade opportunity. But this has just been beautiful on New Zealand dollar, US dollar. The amount of sell short opportunities that we've had on that during this downward trend, just multiple bear flags. So again, a bear flag formation, I'm sure you're all aware of what a bear flag formation, but it is pretty much as it sounds. It's a flag, so just an inverted flag where you get within a downward trend, the price then starts to rise. It never really breaks above the previous swing high here, so it will never break above the previous swing high. It will just have a lower high, and then what you look for is evidence of a break back below the low of that upward trending channel, and then the normal way that works out is that you'll sell off and you'll move back towards the previous swing low, and then in time create a lower swing low as well, and then you'll continue to roll over until we see some sort of change in the trend. But I'm sure a lot of you are aware of that anyway. But that's what we've taken advantage of with that market. New Zealand dollar, US dollar, Australian dollar, US dollar is not that much different either. Had multiple bear flags as well. We banked this morning around the lower Bollinger and the weekly pivot too. We were shorting that overnight. It's retraced to more or less where we entered it actually yesterday. I'm not going to re-enter into that. I'm going to wait until next week. I don't want to get into a trade that I have to hold on over the weekend, particularly with everything that's going on at the moment. I'm just looking to be nimble. I just get in on new trades as we go into Monday's session. I want to see what happens on gold here as well. One trade that I don't mind holding, and I'm actually long this at the moment, is the Australian dollar, New Zealand dollar. It gapped down significantly because I'm not trading against the US dollar. I'm just trading the Australian dollar against the New Zealand dollar. So from a trade idea point of view, I'm long this market. For me, it's got a textbook V-shaped reversal, hit the lower Keltner channels, gapped on the open on Sunday, filled the gap on Monday, perfect gap fill, buy signal, and it's turned into a reversal. And then I'm just looking for the neckline to get broken as we go into next week, hit the 50 MA, and then follow through back towards the upper Bollinger Band. So that's what I'm looking at next week. So if you're looking at a trade idea where you've got the potential for follow through going into next week, I would look at Australian dollar, New Zealand dollar. It's one of my favorite trade setups at the moment. As I mentioned, I'm already long silver. I'm going to hold that position. It's more of a core position at the moment on silver based on higher time frame analysis and a change in trend. Now, oil. So oil is what we have to have on the radar as well. So basically, the theory here from a technical point of view, but fundamentals can change things very quickly with oil. From a technical point of view, we're oversold. We've come all the way back down towards the lower Keltner channel. We've got a buy signal at the lower Bollinger Bands here as well. Let's just have a look at the fib levels, hit that zone spot on. Can you see where we've retraced at the very last zone of real critical support for oil with that retracement? I believe it's the 88.6 Fibonacci level that we've come down to there. I can check it. Let me see if I can check it actually, see if we've got that. Let's see if it's the 88 points. Let's have a look. 88.6, which level is it that we've come down to? Okay, no, it's not quite the 88.6. It's just above that. I don't believe it's a 76.4, but I'll check it. No, it's not the 76.4. It's definitely a Fibonacci retracement zone at that level. You can see if I just extend my Fibonacci level, it's hit that level pretty much spot on where we've retraced there. but it's between that kind of optimal level that you'd want to watch. If you've got within an overall upward trend, again, I'm sure you're aware of this, but within an overall upward trend, taking the swing low, recent swing high, look for the retracement zones. The expectation is if it's going to hold and stay within an upward trend, it shouldn't breach the previous swing low, and it should find the final sort of level of support it should hold is between the 76.4 down to the 88.6. That's pretty much where we are at the moment. We broke through the 50%, broke through the 61.8, and that's where we're finding support at the moment for oil. So we have a buy signal on oil. If it breaks above the weekly high, or certainly if it breaks above Thursday's highs and also Wednesday's highs, and we clear above the weekly pivot, I'll show you on the weekly. Yeah, it's reasonable for a reversal if we confirm that. Let's just have a look at this channel here. Just try to be parallel with your channels when you're doing this. Let's just see. I mean, I would say that's relatively parallel, isn't it? Try not to be too subjective when you do your trend channels, which I'm sure you're not, but I just try to be as on point as possible. I mean, we've got very clearly connecting here at the recent highs there and the closes. So we just put that channel on, and then we're just linking this channel here. That's the low, which is actually marrying up. Yeah, that's marrying up with the lower channel. So we've got 1, 2, and we just pull it back further, but then we bring it back down towards those swing lows, going back towards January of this year, and there you've got reasonable parallel channel. I would suggest we can drag it back further than that. You can just see traders are to a certain degree just looking at that channel as well, where we're finding support at the moment right at the lower channel, and it's parallel to that. I always look for just that parallel support on crude oil. So I would say it could be a nice level from a risk reward point of view. What I'd look out for is once we break above this downward trending channel and then we confirm for a buy, it could be very big risk reward to the upside. So you have to remember as we go into November, the sanctions will go ahead to Iran. And with that, we're very oversold. We're at the lower Keltner channels. We are within the buy zone right now, and it almost looks ready to go long. It just depends on the Baker Hughes oil rig count later on today, and whether as we go into the close today, if we break above some of this resistance. I would suggest if we break and close above the weekly pivot and the last couple of days of highs, we could be getting going for a breakout, particularly if we clear the weekly pivot, we get back towards a monthly pivot, then we could be on track for a reversal going into next week. So I'm very curious to see. We'll go over that on the week ahead commodity report on our YouTube channel. So we'll be going through that tomorrow, and it'll be interesting to see how this does close as well. Basically, the levels I've got there, I've got the Keltner channels, I've got the Bollinger Bands as well that I'm looking at, the Fibonacci retracement zone, the underlying trend channel. I mean, that's what you'd want to look at from a technical point of view, but oil is more so than many other markets, is very fundamentally driven. So what I mean by that, it's very influenced by news items such as the Baker Hughes oil rig count, the oil inventories data, any major announcements from OPEC, any updates on sanctions, any updates on overall oil supply coming out of Saudi Arabia, coming out of Iran. And you've got a constant flow of data when it comes to oil, and you just need to be aware of that because that can very quickly just change the overall sentiment for the price. So with oil, you really need to know what you're doing in terms of marrying up. This is why I've got real-time news feeds constantly for oil prices, because it helps us when we get the additional reports. Even Trump has had a big impact on oil prices this year when he tweets and puts out his unhappiness about high oil prices, often correlates to oil prices getting whacked. And we see a lot of geopolitical news and fundamental news which can affect oil prices. But from a technical point of view, we're at a zone where you would anticipate oil to hold and rally from. But it needs a bit more confirmation. Let's say it just held at this level and then it rolled over next week and it broke below the swing low, then you're on track for a revisit of the monthly pivot, which is 64. That's what it did this week as well. So we saw consolidation beginning of the week, no follow through, and then it revisited the lower channel, weekly pivot, lower Keltner. So if it was to have another round of doing that, no follow through, then it will be a staircase pattern for a sell short. And you could probably look at that on a lower time frame, like the 4-hour chart. Yeah, there you go. So you've got staircase. So you could look at that, for example, a little bit like we were looking at on the Australian dollar, US dollar as well. So you've got these multiple staircase patterns, which then result in a breach of the low. Oh, let me just remove that. Okay, and then you've got these multiple staircase patterns. On this is just the 4-hour chart. In fact, the 4-hour chart at the moment is not showing such a stair. It's more of a sideways consolidation with a buy signal developing. So I guess what we'll look out for is if we break this channel, which has been staircasing, then break above the weekly pivot, it looks like we should be good to go for a long. Okay, I know there's a lot of lines and a lot going on this chart right now. You don't need to go into that level of technicals in terms of your charting, but we use this to get very clear precision on our entries and exit for charts, and I'll just show you what I'm looking at basically on these channels. But where we are at the moment, looks like we might be on the verge of a break above that 4-hourly. So if we can get above 67.50 and then break the pivot, so if we break above $68, it looks like we could get some good follow through, and oil is such a good mover when it gets going. So let's keep that on the radar. It's we're seeing a fair amount of movement for a Friday here, but just be aware that the oil inventories from a Baker Hughes oil rig count that is due out at in 1.5 hours. Okay, and that could be a big mover for oil. Okay, good. Right, coming back to Australian dollar, New Zealand dollar. Yeah, I would definitely look at that. If it can breach above the midpoint on the Bollinger, which is basically the 20-day moving average, it should, in theory, hit the weekly pivot, which would be about, from where the price is now, be 20 pips. And above that, 50 MA and 38.2 Fibonacci, which from current price would be about 40 pips. Okay, and then monthly pivot, and then 50% level next week. My ultimate target, ideally, going into next week, if we get follow through, would be to follow through up towards. I don't know that we'll get that high, but if we do see a full-on reversal, I'd look at the 50% fib there. That's my ideal scenario there, just to take profit with all of that resistance zone in play. But let's see if we get follow through. But I still like that at the moment anyway, going into the weekend and as we go into next week. Okay, well, what else are we seeing right now? So gold seems to be capped right now at the upper Keltner, about 1240. I'm not going to chase gold at that level. I'll wait for fresh entries next week. I still like silver. I'll stay long silver. Let's just see what's happening on the euro. Is showing a bit of a buy signal lower Keltner channel at the moment. It's a bit aggressive to go long at the moment, but I want to look. Let's look at the dollar. Yeah, the dollar's reversing from the upper Keltner channel. Weekly pivot broke out to 3-month highs more or less, and now it's reversing and selling off. So that will just aid. That will give a bit of support to most currencies against the dollar, which it is at the moment. US dollar, Japanese yen tanked today, back at the monthly pivot as well. Yeah, New Zealand dollar. I mean, I do have the start of a buy signal. We shorted that, banked it this morning. Glad we banked it because it's now full on reversed. I don't have a clear signal on that at the moment. Depends how it closes today, but it's a no trade basically. I think what we've seen is basically the move that we were looking for, and now it looks like we are getting a bid certainly at the recent weekly pivot from this week. So yeah, no action to be taken there. Oh, that's interesting, isn't it? Australia. See, that could favour our Australian dollar, New Zealand dollar long. So now the Australian. I mean, at some point we will change from this sentiment, this downward trend. But Australian dollar is catching a bid, isn't it? From hit the weekly pivot, hit the lower Bollinger, and now we've got a buy signal. Actually, I'm not going to go long the Australian dollar unless it full on starts to break out today, but I don't think it will. I'll just stay long the Australian dollar, New Zealand dollar. I think that's the better trade here, but see what you think. But Australian dollar is definitely catching a bid, which therefore should mean other Australian dollar crosses are going to catch a bid as well. So let's look at them and let's see. So what's Australian dollar, Japanese yen doing? So yeah, catching a bid as well. Let's see if anything else looks good. Australian dollar CAD, reversal that. Australian dollar Swiss franc. Now that's been really choppy this week. Quite a sideways range on that. Yeah, again, I'd want to see how they close later on in the day. Let's just look at New Zealand dollar crosses. Yeah, they're all starting to catch a bit of a bid there as well. Lots of reversals. Basically, a lot of the currencies, they went up. I'm sure you saw this as well, but they went up prior to European Central Bank announcement. The euro was up, the pound was up, the New Zealand dollar was up, Australian dollar was up. Now, the amount of times one of our clients actually at the Gold and Silver Club was good to share this data. We were going through it, and basically what you want to note, and this is something that you should definitely do if you haven't done so already, in your trading diary, go through all of the European Central Bank announcements that are going to happen between now, well, the end of the year, and as we get new schedule for the ECB going into next year. And it's now being 8 out of 9 European Central Bank announcements after Mario Draghi's press conference. Later on in the session, the euro has closed lower. So you're just looking at probability. And what you want to do when you're trading is you want to gain an edge and you want to look at probability. So yes, you want technical strategy. You want to understand your fundamentals. You want to understand risk management. And then you want to work on your edge. And that happens, of course, with experience, but it's probability. So you just look at how often does this happen in the market and what's the probability of this happening again and what are the price structures showing. So for example, yesterday it was very high probability that later on in the session gold would pull back, the euro would sell off, the US dollar would break out, and commodity currencies would sell off because it's happened so many times after European Central Bank announcements. We just wanted to see that happen. So later on in the session, that's exactly what happened. We shorted the Australian dollar, we shorted the New Zealand dollar. We were expecting gold to sell off later on in the session. That's what happened. But then take it one step further. Need to know when to bank it as well. So the following morning is often what we see is that big sell-off occurs overnight. The dollar breaks out. Gold and euro, pound, all of the main currencies against the US dollar, they sell off, but don't expect the move to necessarily last. It seems to be short term. You want to be banking that during the beginning of the London session and go into around 8-9 o'clock in the morning or so. You want to be looking at banking those near the daily lows. The move, normally it's anywhere from 50 pips to 100 pips, but then get out of the trade and then square up and then wait and see where the next opportunities are. So from a probability point of view, what I'm saying is within your trading diary, go through there's all the European Central Bank announcements. You can get that, or you can get it on a number of news feeds, news sites, but just put it in your trading calendar. European Central Bank announcement, they're typically on a Thursday, 1:30 London time. You want to know that the decision is at 12:45, which does have an initial impact, but it's Mario Draghi's press conference that a lot of traders watch. The anticipation is that maybe markets, they go up in the lead up to European Central Bank announcement. They expect euro to be well supported, not a major change in policy, but 8 out of the last 9 European Central Bank announcements, the euro and commodity currencies, they sell off afterwards, okay, later on in the session and overnight during the Asia Pacific. So you're just looking at probability. 8 out of 9 is quite high probability, okay. So you look at those for trade opportunities. And the more you can do that and understand FOMC statements and how they impact also gold prices, silver prices, the more you can understand there's something called the January effect, which occurs every December over the last 5 years for gold prices, silver prices, Australian dollar, New Zealand dollar. It just all stacks up. You start getting a higher probability of trades that you can anticipate occurring. Now, nothing is ever guaranteed. We don't have a crystal ball and things can change, of course, and you get black swan events and so forth. But as long as you manage your risk correctly, you stack probability on your side and you use your experience in the markets, it will help you just to get better trade ideas and to become a more successful trader. Okay, so yeah, it's been interesting last 24 hours because we've seen it play out again with the ECB, and that's worked out. Just it's kind of straightforward, easy trades to be had, and why not? It's kind of easy money in the markets. So what we're seeing at the moment, I guess what we're seeing, because we're seeing so many reversals, I think the main narrative right now seems to be right now that we're going to see gold as a safe haven for the rest of the day. So we're going to see that continue to build strength. The US dollar is basically pulling back at the moment, so I wouldn't look to long it. I'm not really looking actually to do anything with the dollar until next week right now. I like Australian dollar, New Zealand dollar for a long. I think that's a reasonable trade that I'm happy about leaving open over the course of the weekend. If it gaps up on the Sunday open, I'll bank it immediately off the open. Otherwise, I just leave it just running over into next week. I'm happy to leave silver going into next week. We banked a lot of trades. We've come out of a lot of positions this week and banked a lot of positions as well over the last 24 hours. So we're going to leave as is. I might look at oil if it breaks above the weekly pivot. I'll go long. I might look at that to buy it on a break above the weekly pivot as we go towards the end of the session. Just keep a position on, or certainly go into November. I might look to be going long oil going into next week. So that's really it, I think, in terms of the main trade ideas right now. I think the S&P 500 may hit 2,600 before the month is out, or go into November before we really start to see major support come in. That would make sense for it to get down to that level next. And yeah, that's it really, guys, in terms of trade ideas. That's what we're looking at the moment. I hope that helps and just gives you a little bit of clarity in terms of what we're looking at. As I mentioned before, we will be putting out another report over the weekend. So if you haven't done so already, this is the YouTube channel to subscribe to. This has been recorded as well, so you can go back, make sure you subscribe to Binary YouTube channel too, because that way you get kept updated with all of the recordings and Binary regular daily reports as well on the markets, which is really useful for you to be kept updated with the major news. And if you would like to join a community of successful traders at the Gold and Silver Club and get access to all of our live trade alerts, you'll get alerted via WhatsApp, email, SMS. You'll have access to mentorship, of course, expert advice, in-depth market analysis, and all of our trusted insights, so you can act quicker and maximize your return on trade opportunities. The application form is just at www.jointhelivetradingroom.com. Okay, so all you need to do is complete that application form, and we will, of course, get in touch with you ASAP. Okay, fantastic. So I think that's it for today's session. Thanks again to Sharice and Binary.com for putting on today's session. I wish you all a fantastic weekend. Good trading. We'll catch you back here at the weekend on the YouTube video reports, and have a great one, guys, and good trading. Okay, so all the best. Thanks again, and we'll speak to you on the next one. Take care, everyone, and good trading. Bye bye.